What are you expecting from the Fed later today? Again, 99% chance, according to the CME FedWatch tool, of a pause. But what are you expecting from Jay Powell? Are you expecting to hear a dovish tone despite some of the remaining and lagging uncertainty due to trade and tariffs and other things?
Well, first, I agree, unlikely to move. I'm expecting to see a tone that's maybe a bit more neutral than the market's expecting for exactly a reason of uncertainty. And I also point out that while there's a great deal of sort of talk and maybe some anecdotal evidence of softening, the economy incoming data have not been soft yet. And finally, I point out that inflation is still, not completely under control, and inflation expectations by some measures have been moving a little bit higher. So I think the chairman is going to be neutral as opposed to leaning more dovish.
All right, so you're saying that some of the incoming data is a bit anecdotal, but I want to point to one thing. The Atlanta Fed's GDP now, latest estimate when it comes to that GDP for Q1 is going to be down about 1.8%, but that's actually an upward revision from what we saw from that same measuring tool just a few weeks ago. But are you calling anecdotal, like the airlines and other retailers saying they're seeing softness in consumers? Is that what you're considering anecdotal? And if so, how does the Fed respond to that? Because that also is real time. We're hearing it from the companies in real time, like a Delta or a Kohl's, that the consumer is softening.
No, absolutely. That's what I'm considering anecdotal. There's also some survey data. You heard Chair Powell at a speech recently say, for example, that consumer survey data has not been a great predictor of actually consumer performance. And we should also recognize that labor markets are still relatively balanced. In fact, at a 4.1, 4.2% unemployment rate, some might say we're at full employment. And so, yes, everyone's hearing the stories and believe the stories that CEOs are telling of maybe softening order books, some concerns being showing up. But the real economy looks like it's in pretty good shape. And so I think what he's going to suggest is let's wait and see how this actually plays out, as opposed to doing anticipatory easing that they may regret later. Because again, remember, inflation is still not at 2%. Inflation expectations by some measures have been creeping a little bit higher. And I don't think they want to lose control of the inflation narrative as they switch to, or as the market wants them to switch to, a softening narrative.
But Roger, isn't that kind of the disconnect when it comes to all this? Basically what you spelled out, I mean, that seems to be, well, I do want to ask you about this. There are a lot of concerns about stagflation. Are you concerned about a Fed that actually raises inflation expectations but lowers its expectations for economic growth, and what signals that could send not only to the markets, because the markets and the economy are two different things, but the real economy?
Look, I think you've put your finger on exactly the dilemma. I'm not ruling out at all the possibility of the move that you just talked about, where they see inflation being a little stickier, taking a little bit more time to get to 2%, and at the same time downgrade their estimate of the economic outlook. There is uncertainty already built into the economy of the type that we just talked about. And to be very honest, there's also policy uncertainty. What's going to happen vis-a-vis tariffs? What's going to happen vis-a-vis the budget and tax policy? And so against that backdrop of inflation uncertainty all around, I think the message should be one of caution, with reflection that uncertainty still leaves them in a position where they are wait and see. That's the last thing that Powell said, and I think he'll repeat that at the upcoming press conference.